You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, education, throw in some unusual activity, sprinkle on a dash of just nonsense, and you have the witch's brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. 13 programs on said network, including 400-plus hours of the Option Block for you guys to just dive right into. You can find it all, of course, the mothership, the flagship, theoptionsinsider.com. Just click on the Insider Radio Network tab, top left corner of the page, and you're off to the races. Of course, you can find us iTunes, TuneIn, Stitcher, wherever you like to find your favorite podcast programs. Just search for the Option Block, or if you want to find everything in one place, search for Options Insider or Options Insider Radio, whatever you want to look for, and you can find our network feed. It has all the shows in there. I recommend you grab that one because it makes it much easier for you. You don't have to pick and choose. And, of course, you can also find us via the App Store, on the Google Play, the Android, and even the Fire OS app stores. All right, and joining me on the old program today is everyone's favorite from that scenic and temperate zone known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old program, sir. Happy pre-4th of July.
Absolutely. Looking forward to birthday number 239 for this great country of ours.
That's true. That's what we're on. We're hovering around another insignificant year. On 250. That'll be something. That'll be something to celebrate.
I can hardly wait.
We got a few years until then, and to help us pass the time, we have invited on a special guest star for this episode. He's been on in the past, but you probably remember him more recently from his co-hosting duties over there on the Trading Tech Talk program. I am happy to welcome on to the Option Block once again. It has been far too long, Mr. Henry Schwartz, the founder and CEO of Trade Alert. Henry, welcome back to the Option Block program, sir.
Thank you, Mark. I'm happy to be here. I like all your shows, but I have to say, including the one I'm on, but I happen to like this one the best because it's kind of like the original.
It is very much, I mean, it's not the original. We had other shows before it, but it is very much one of the early pioneers on the network, and certainly one of the ones to introduce this multi-host format that we have adopted for a lot of our other programs since then. So it was a pioneer in many ways, and I know back when Alex was on the show, Henry, he was always bugging me about getting you back on. So wherever he is right now listening to this episode, I'm sure he has a smile on his face to hear that you're back on the program. You're one of his two favorite people. He's always bugging me to get on. You and good old Don Schlesinger from the Bolex, or the other one. So you're on a very exclusive list, Mr. Henry. You should be very proud.
I'm happy. And hi, Alex. How you doing? I hope you're doing well.
There you go. A little love for the Viceroy as we keep on rolling right on into the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking from a broad market perspective. We are recording this on Thursday, July 2nd, heading into the teeth of the holiday weekend here in the States. So nothing cooking tomorrow. We're going to wrap it all up here today in the markets as well as on the network. No vol views tomorrow for all those of you tuning in for that. But of course, in the markets today, a bit of a weird day, a bit of a schizophrenic day. We started off, of course, we had some numbers this morning that were not exactly scintillating, shall we say. But the market started off, of course, this morning. We had a little bit of a rally. Put our rally pants on, pretty mild, nothing crazy. And then as the day progressed and the numbers started coming out, they were a little bit less than everyone expected. We saw them weighing on the market a bit, and most of the major indices were in the red on the day. And now, as we close the day here, pretty much unched back on the day. S&P's almost literally unched on the day. The Dow and the NASDAQ also almost unched on the day. So we pretty much back to where we started. It was a long voyage to do nothing except, of course, to squeeze some vol back into the marketplace. Fixed cash ticking up about 1.2 handles to finish the day up there about 17.27. So we're flirting back with the high teens there in VIX land. And talking about what we saw out of the numbers, like I said, most people saw them as being disappointing. The payrolls grew by 223,000 jobs last month. That's 10,000 less than the 233 that economists were expecting. And the previous months were also revised lower by 60,000 jobs again. Not another good sign. Unemployment rate fell to 5.3%. That's usually bullish, but it was because more people were leaving the workforce, which is not a bullish sign. So all in all, it was a net weaker report, and that seemed to weigh on the market in the latter portion of the day. But apparently not that much because we closed unched at the end of the day. So a lot of seesaw action. We turn now to you, Mr. Schwartz, as our special guest star. You do get pride of place. What really caught your eye in today's market activity, sir?
Well, today was kind of back to business as usual, even though obviously everybody's kind of on edge about Greece. But market, we wiggled around a little bit, but we really didn't have that much range. Volume was barely 15 million contracts. It kind of ends a very good week, though. I mean, all this volatility. I guess it's only a 4-day week, but to have a day that was almost 22 million contracts on Monday. Starts us off really well. There were some hot spots for deals. Index and ETF were both heavy today. The stock volume was really actually 15% below normal. So that kind of goes to show you that people are playing around or positioning for Greece one way or another. Energy was actually the only thing that had anything kind of hot going on today. Otherwise, it was actually kind of a quiet synthetic Friday.
Synthetic Friday, I like that. I haven't heard that one in a while, but a good one as we turn our attention from New York to St. Charles. Uncle Mike, a bit of a weird one. We're up, we're down, we're up, we're unched. What caught your eye in today's activity?
Well, the main thing that was just catching my eye was just the fact that I don't see a lot of end-of-day movement, so to speak. And I think just a lot of people are either a lot of the up and down movement throughout the day was just people clearing out their longs or clearing out their shorts and just getting ready to be probably like I am, fairly flat going into this weekend. I mean, I still have an out-of-the-money call on SPY, but it's really not a ton of exposure. I don't have any other short puts or anything like that. I know what I'm doing is just playing the wait and see game. And then Monday I'll be chomping at the bit if we have a dip, or we'll see what happens if the market goes up. But I think a lot of people are just wanting to watch the fireworks this weekend instead of watch the fireworks on on Saturday or Friday, I guess, depending on what city you live in, instead of the real fireworks that are happening on Saturday with this referendum.
Yes, many different metaphors there for fireworks. Unfortunately, you can't really apply it to overall options volume. That's where we turn our gaze at the beginning of every month. The numbers are in now for June. And June, the month itself, actually wasn't bad. We saw exchange-listed options volume. These numbers, of course, coming out of our friends over there at the Options Clearing Corp, reaching 334.5 roughly million contracts in June. That's a 4% increase from June 2014, which was 321 million and some change. So that in and of itself on the surface is indeed a good thing. But as we've been saying all year long, net options volume is still sluggish, still lagging behind where it was last year. And when you look at the year-to-date numbers, not perhaps as rosy. Year-to-date, we're still down 6% from 2014 with about 15.8 million contracts put up so far in 2015. In June, of course, breaking it down by an equity options perspective, it was about just a hair shy of 300 million of those 334 million contracts coming in equity options volume, whereas index options volume was 36 million. That was in June. So interesting stuff. Henry, you spent a lot of your day obviously immersed in the options data and looking at the numbers come out of OCC and Opera and everything else. Are these numbers jiving with what you're seeing over there at Trade Alert, which I'm sure they do, but you guys have a really, really good handle on these numbers as well. And B, what's your take so far? Obviously, we're pretty weak year to date, down about 6%. Do you see any prospect, maybe a Rocktober on the horizon, something like that, that could perhaps get us back flat for the year?
I mean, on volume, I'm impressed that it was an uptick. Maybe last June was just really quiet. Kind of the way things have been going, except for, this week, which was, one of the nicest weeks in a while. It's been pretty quiet. When I talk to banks and floor brokers and inter-dealer brokers, everybody's kind of griping about volume. So, but I think that now that we're back at kind of flat on the year, it does kind of create a little bit more pressure to do something. I think that's one of Mike's favorite phrases, and I think that might actually be great for kind of the second half of the year. It's having some big swings, with Greece or Puerto Rico and this and that is great, but just kind of forcing people to actually do some, yield enhancement strategies, some hedging strategies if they're nervous about a down year. I think that'll be good for our industry.
I think you are confusing poor Uncle Mike with the Rock Lobster, who is indeed on assignment out there in Maine somewhere, who likes to say you have to do stuff. So, Uncle Mike, are you deeply offended?
Not at all. We share that saying often.
Yes.
And the way that things go on this show, you know what? Since he's not here, I'm claiming that statement is mine now.
That's true. He's not here to defend it. So you can have that. You can have your juice for free. And I'm trying to think of a few other Andrew-specific terms. I'm sure they'll come to me. And since Mark's not here, even though it is his birthday, you can have the manager of the mini medals as well. Go for it. Go crazy. Have all that fun stuff.
Nah, I'm staying away from the mini medals.
Yeah, that's true. They're a bit of a raucous group. Speaking of raucous, turning our attention to a name that's always doing something to get some attention out there. They produce as much PR as they do electric cars. This is Tesla, of course, closing the day today, up another 4%, closing at just about 280 even on the day, up nearly 11 handles. Just another crazy day for them. That's on the heels of them reporting that they delivered record deliveries, essentially about 11,500 Model S's in the second quarter, up 52% on the year, still far below the relatively rosy predictions put out there by their CEO, 55,000 annual deliveries, but it was enough to spark the market into a love fest for Tesla. All things Tesla, like I said, the stock rallying pretty hard. The options doing some pretty decent business as well, about 3x on the day. They average about 87,000, doing about 223,000 today. So fairly robust. Surprisingly, though, not as one-sided in the options as it was in the stock. Stock, it was buy. Options, in terms of calls over puts, it was pretty much break even, about 1.3 to 1 calls versus puts. So not certainly when you see a stock moving nearly 11 handles, 4% in one direction, you usually see a lot more unanimity of directional bias in the options flow. And so far, not exactly the case. Henry, you are I'm going to give you a new nickname, the Flowmaster here on the show. Do you see anything out there in Tesla flow that really kind of caught your eye today?
I came up with a slogan for Google AdWords, and it was "Option flow is all we know," because it's pretty much all we pay attention to.
I do like that. That is good.
It's nice and simple. Tesla's been pretty wild for a few days. And I think that the leg up has surprised some people. There's a nice piece that Ophir Gottlieb posted on his webpage, which I think is Capital Markets. You can Google him, where he really lays out kind of some of the risks and some of the numbers. But what we've seen is a lot of front term action. Today was all the 275s and 280s, and stock closed at 279.87. Those expired. In fact, out of today's 500,000 contracts in there, looks like 52% was things that expired today in Tesla.
That's insanity.
So yeah,
this stock is usually pretty insane, and the options are insane, but that is surprisingly insane. Wow.
I mean, it shows you a lot of people love these, condors and butterflies, using these weeklies. And when things move a little bit more than they expected, they really have to scramble to cover, and things can get pretty squirrely.
Half of that volume, people are always talking about when we're going to get daily options, We effectively have them now, and we saw that today. Half of the volume in Tesla is essentially a daily contract. That is madness. And you're right, certainly the lion's share of that closing on a day like today when you're blasting through 10, nearly 11 handles, and the weeklies are going out, and you need to scramble to cover. Yeah, probably not a good, or who knows? So many of these trades out there are just gobbling up calls that I have to imagine there have to be at least a few smiles out there in Tesla today. I know some other things catching your eye over there today, Henry, as well, including good old 3D Systems, ticker symbol DDD, closing today right around $19 or so, up about a third of a handle on the day. Underlying, not lighting it up, but options doing some interesting stuff. What caught your eye out there in 3D Systems today?
I was looking at these 3D printing stocks, Stratasys and X1 and Triple D this morning because they are just beaten to hell. And we noticed some call buying in Triple D this morning. A lot of it in the short terms expiring today, but also in the regular Julys, even the 21 strike saw a bunch of sweep buyers. So it's. You look at the chart, and these things are down like 70% in the last year. All of them. They're pretty much all just kind of getting crushed together. But today, 15,000 calls in 3D, which is twice normal. Put volume was 4,500 contracts. It looks like somebody bottom fishing, basically. I think, it was really fashionable. Everything was going to be 3D printed. They were opening up the MakerBot stores and everything else. I think, reality has set in a little bit. I think it's going to take a lot longer for the factories and production in general to kind of adopt this in so many ways that that some of the people think it'll do. But we saw it opened up down at a multi-year low and bounced, finished up about 2%. Biggest trade was a 19-cent buyer of these July 21 calls, regular Julys. So looks to me like somebody's at least putting a little bit of money to work on hopes of a bounce. I wouldn't necessarily buy it just because it does feel a little like catching the knife. But it's definitely one to keep an eye on. And then you also could get a squeeze. Most of these things are pretty well shorted. Triple D, I think, is looks like it's about 7% to short. And that wouldn't take much for people to start to get freaked out. If it goes up above 20, you could see some short covering.
Yeah, I wouldn't be surprised if a lot of this was specking on a squeeze. You're right. There's a ton of paper going up on the upside here. You mentioned about 3,000 of the July 21s. We also have about 1,100 of the July weekly, 1 week after those, expiring on the 24th. 21 half calls, so people gobbling up those about 1,100 times. A little bit farther out, the AUG weeklies expiring that first week of August there. The 22s, about 600 of those. So it was pretty much unanimity on the call love out there. 800 of the Nove 28s, so we're getting a little farther afield into crazy land there on the 800 of those. All of that pretty much opening for the most part. Not a lot of open interest on a lot of those strikes. So, interesting stuff. And you're right, 3D printers getting a little bit saturated. My little guy's kindergarten has about a dozen of them ready to go there. And they're getting cheap enough and ubiquitous enough to the point there's enough competitors in that space to the problems of 3D spacing that the prices are coming down, the margins are coming down. They tried to do with 3D printers kind of what they did with the inkjet, making that printing plastic material look very expensive. But even now with, we're already seeing generics coming on the market and the squeeze on that because that was going to be their big moneymaker. And apparently that's not doing that well either. So, 3D printers ubiquitous, but perhaps not the moneymaker that everyone hoped for. And certainly our friends out here scooping up the calls are certainly waiting for it because you're playing pretty close to the fire here. Those ones are expiring very soon. Yeah, so someone obviously very enthusiastic here, piling into 2,600 of these 19s that expired today. Again, talking about all that weekly volume, daily volume we saw going up in Tesla. Good lion's share of today's volume out here, roughly about a quarter or so, in daily options as well. That didn't really work out, as you said there, Henry, paying well over a penny for these things that went out at a penny, the July weekly 19. So There you go. When you roll the dice on some of those lottery tickets, you get burned, and that seems to be one of those times. Speaking of odd activity and all that kind of fun stuff, it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. You know the drill. This is the portion of the show we break down the weird, the wild, the wondrous paper that is lighting up the options market today. We have a great guy to help us do that today, Mr. Henry Schwartz, the Flowmaster over there at TradeAlert.com, going to help us parse some of this flow. Going to kick things off with a bit of an interesting one. Looks like a size roll out here in Targa Resources Partners LP, the ticker symbol NGLS. I know one of my favorites. Can't start my day without getting my quotes on NGLS. This is the name that does about 800 contracts a day. So typical volume for an odd block name, doing about 15,000 today. So clearly a lot of activity, 17 and a half calls over puts. So that shows you where the love was today from an NGLS perspective. It was all calls all the time. We started off profiling actually a DEES call spread. It was a DEES 40-50 call spread going up for 80 cents on a bit of a ratio, 4,000 by 5,000. No open interest to speak of on the 40s, but 5,500 open on the 50s. So looks like perhaps our friend here is rolling down a bit of a buy right, bit of a covered call to get it perhaps a little bit closer to the fire to harvest a little bit more yield. We did also notice as we started looking again a little bit more, there also was what looked to be some closing SEP paper as well, going up here with about another ratio with SEP 45-50 call vertical, also going up 3,000 by 2,000 times. I don't have the exact price on there as well, but that appears to be closing as well. 3,400 contracts open on the SEP 45s, 3,000 on the SEP 50s. So our friend here seems to be closing out a size spread here in SEP and then rolling down from the 50s, which is an optimistic strike to say the least, even by DEES out here in NGLS, and rolling it down to get a little bit more yield, a little bit more fun out of this puppy here on the 40 strike. Mr. Flowmaster, now we'll turn to you as our special guest star. Did this flow come up on your radar today, and what do you make of all this rolling and adjusting and closing out here in NGLS?
Well, yeah, it hit the radar because it was 37 times normal volume. Normal volume's barely 400 contracts. And we have it as exactly what you said. Basically, although it looks complicated, it seems to be a short call position. They're closing those SEPs. One of the DEES legs is closing, and then they're opening those DEES 40 calls. So it looks like somebody basically trying to add some yield. This stock is down from it's down about $5 in a month. So it worked really well, and what you see is somebody if it worked, keep doing it. And that's what it looks like to us. But we probably won't see anything happen in this thing for a couple months now.
Yeah, and I'm looking at this too. The fact that it was kind of a ratio like this, that also tells me that it's possible that someone perhaps sold some stock as well as a risk management tactic on the way down on this roll, just because of the fact that if the person has like a covered call per se, they still have a little bit of room for upside. But like Henry said, it looks like they're trying to get a little bit more yield on this.
Yeah, it looks like those DEES 50s were a little bit more relevant a few sessions ago. Now, not so much. So deciding, it's worked out before in the SEP. Discretion, perhaps the better part of valor here in DEES. Roll down, get a little bit more juice. All right, moving on to our next victim here. Actually, let me finish that up there. So yes, getting a little more juice for the squeeze over there in our friends in NGLS. As we move on to our next name, Henry talked about some of the commodities moving a bit today. We saw some activity in the market vectors. Gold miners ETF, one of our old friends out there, GDX, closing today, $17 and 63 cents, up about 2% on the day, or about 35 cents or so. This is the name that does some size volume, certainly for an odd block candidate. This one does about 42,000 contracts a day, doing 47,000 today, so a little bit more than normal, but nothing super crazy. 2.5 calls over puts out there, so calls leading the charge, including this one size play we saw going up out here in SEP in particular. You guys scroll down, you'll see it as you're playing the home game as well, listeners. The SEP 20s jumping off the page to the tune of essentially 1 mega block going up for 10,000 contracts over there on the SIBO. Looks like paper buy-in for a cool quarter, a cool 25 cents. That's on the heels of about 34,000 contracts open on the strike. So it appears to be a straight-up close of a substantial portion of the open interest, but certainly not all of it. If that is indeed all the same paper, then they have a few more to go. Looks like they're buying back a short call on this one again. A similar theme here of closing out your buy rights, or in this case, not rolling, just closing. And if this is our friend, he wrote a bunch, and he's probably got a few more to go. So be on the lookout for more volume coming in here on the SEP 20s as we go forward. Mr. Flowmaster, first off, do you like that nickname?
Yeah, I don't mind it. It's not as good as Viceroy, but it's okay. You know, I'll take it and I'll work my way up.
To be on the odd block, you need to have, or the option block, you need to have a nickname, sir. And so that will be yours, at least for the time being, until we think of something better and or more damning.
And now, true story, my clients literally call me Uncle Mike now.
So, yes, the long arm of my nickname machine reaches very far.
It definitely does.
Mr. Schwartz, what's your take here on these SEP 20s? You agree that it's closing? You think perhaps there's someone piling in? What's your take, Mr. Flowmaster?
I agree it's closing. I think, if you look at the chart of gold or GDX or really almost any of the gold names, they've come in pretty hard. And when things get freaky, gold calls are the same as downside puts. When the world is ending, people go into gold. So it seems like somebody taking some money off the table and also being prudent in case things get really funky with Greece or anything else. So. I would like to see, a bunch of the gold names kind of recover, because I own a little bit of Barrick Gold, and they've all just kind of slid.
So those are funky gold calls, in your opinion, then?
They look a little funky, yeah. It looks to me like they were sold around $1 a month ago.
When things get funky, buy some GDX calls. I like it. Says the Flowmaster. As we move on into our final victim, our final name here in the old odd block. This is ARM Holdings PLC, ticker symbol ARMH. If you might be familiar with them, listeners, they design a lot of those ARM processors that are in a lot of your phones and everything else that a lot of firms out there then license from them. They're actually in the guts of a lot of the mobile devices you guys carry around with you. You may not even realize it. Closing today, $48.66, down about 1% or so on the day. It's a name that does about 1,800 contracts a day, doing about 13,000 and change today. So fairly aggressive paper out here. And we turn our attention here in ARMH to, indeed, the ARC cycle in particular. The ARC 44 puts caught our eye going up. Once again, another mega block, this time for, the beginning, not so much a mega block, 262 for a $1.40 paper buy-in. As the day went on, a total of 3,200 going up there on a variety of different prices. From a $1.40, you saw some going up for as high as a $1.60. They went out at $1.50 at a $1.65. So those early kind at a $1.40 looking pretty good now. In hindsight, of course, as the stock sold off a little bit today too, that certainly helped. One contract open on the strike, so all 3,262 probably opening, maybe 3,261 of that being opening. But still, yes, interesting stuff. Obviously, someone coming in. We didn't see any stock going up with this, so it appears to be what it appears on the surface, a straight-up downside or hedging play here on ARM. And looking at a chart here, there has been some downside movement of late, but for the most part, for the better part of last 6 months at least, ARM's been kind of vacillating in the mid-50s and has sold off recently. Perhaps our friend here concerned that sell-off will continue and wants to get a little downside protection in. Mr. Schwartz, take us home. What's your take here on our friend gobbling up some puts here in ARMH?
It's definitely heavy and it's definitely bearish. I'm looking at the chart and wondering if somebody's thinking it's not going to hold this $48 level that it kind of bounced off in March. That's all. It's what's interesting. I was just looking at the term structure, and vol looks like it's up 2 or 3 points all the way across. 3.5, almost 4 points in the July. So it does kind of seem a little bit more extreme than just somebody, hedging or something. There's pretty big sweeps, especially in the October 44 puts. Those are $4 lower. So it looks like somebody's a little nervous about this one, kind of in particular.
Thank you for that, Mr. Flowmaster. A pleasure to have you on the old odd block. And now it's time for us to keep on rolling because it is Thursday, right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. It's Thursday. It means it's time to answer some listener mail. Always one of my favorite parts of the show because we get to talk with you guys, see what you guys are chatting about, what you want to know about. No shortage of ways for you to get your questions and comments featured here on the program. Surf on over to the website, click on the Contact Us form. A lot of you guys like to do that, and you can certainly use that way, or shoot us an email, questions@theoptionsinsider.com, or via social media, twitter.com/options, facebook.com/theoptionsinsider, or a lot of that is baked into the iOS version of the app as well, so you can do it there as well. So no shortage of ways for you guys to reach out to us and make your questions and comments known. Starting off with our friend here, Steamboat Willie. So an old Disney reference there. And he or she asks, what would you say is the best buy and hold strategy using options? A very divisive question. He goes on to write, I'm interested in using some options in my retirement account, but I don't have the time to manage them on a daily basis. I like to put on something on and only check on it every few weeks or months. I'm mostly interested in large cap stocks, although I'm not averse to dipping my toes into alternative assets such as oil. Well, he's clearly been watching the news. You may have missed some of the run up there in oil, but if you're still bullish, that may be an opportunity for you. This is obviously a divisive one, Mike. I'll go first, and you could feel free to chime in. Maybe we'll have a vehement disagreement that I'm guessing probably not. One of my favorites, one we talked about before on the show, is kind of the option spin on the traditional covered call. So instead of just buying the stock and writing the calls, you swap in the leap call. I've heard a bunch of different names for this. Brian Overby on our other program on the Options Playbook Radio, which, by the way, listeners, you should be checking out if you're not already. He likes to call it the fig leaf strategy. He has some explanation for it, which escapes me at the moment. And then there's a bunch of other names for it. I usually just call it the stock replacement with a covered call or something along those lines. But essentially, it amounts to swapping out the stock and instead buying a leap, at least 1 year in the money call, probably at least a 70 to 80 delta call. You want something pretty decent in there, pretty meaty in there. And then in turn, writing, he wants it to be a little bit less time intensive. So this is how you can structure it. You can structure this however you like. If you're very aggressive, you want to write weekly calls, you can certainly do that. 52 weekly calls, it'd be a little bit more work, it'd be a little bit more commissions, but it will add up at the end of the day to be a little bit more money for you. But if you want to make it a little bit more set in and forget it, you could certainly do it once a month is fine. You write a monthly call against that leap, and you're looking pretty good. And now you have a position that is better than buying the stock on just about every level. You have a position that has a vol component now as opposed to the stock, so that'll offset some of your losses to the downside if indeed that long stock position does drop. It, of course, has a delta component, so as the underlying drops, that delta is going to decrease, so that option is going to lose money at a slower rate. Again, that's something you want. Of course, you also have that income stream coming in, so it's one of my favorite. If you want to just kind of a relatively easy, relatively set it and forget it, I'd feel comfortable telling this to even a relatively inexperienced options person to put this in their IRA and kind of set it and forget it. You can even go quarterly on the calls if you really want to make it low maintenance. Not going to be as good of a strategy then, but it'll still work. So that's kind of one of my favorites. Uncle Mike, what's your suggestion here for our friend Mr. or perhaps Mrs. Steamboat Willie? I'm going to guess Mr. because it's Willie, but you never know.
All right. Well, Mr. Steamboat, not to be confused with Ricky the Dragon Steamboat, former professional wrestler, I'm sure.
Oh, I forgot about him. That's another one. You're right.
Got it. Anyway, I like that strategy as well, Mark. I think that a couple things with which you need to be aware of is no matter what, there's no 100% way of setting it and forgetting it. I would recommend having depending on who your broker is, having alerts in case certain things happen. So, for example, if you were going to do as I like to call it, the diagonal spread strategy.
I like something to be said for on the nose naming when it comes to options.
Yes. So what I like about that is everything that Mark likes about it, but some things with which I would do to set alerts on it. For example, if your long call goes in the money, let's say that you bought the 50 call and then you sold for a year out, and then you sold the 55 call or the 60 call, whatever. Let's say you sold the 60 call. As soon as the stock goes above 60, I would recommend having an alert sent to you via email or text or whatever your broker does. So that way you can kind of check it out and just kind of be aware of what's going on. The other reason is if it goes to 65 or 70, you risk being called out early. Not a huge risk depending on where you sold your option, but if you're truly setting it and forgetting it, and when I say forget, I mean forget. If you forget about it, you could be short a bunch of stock in your account one day. Now, if there's no dividend involved, there's a such thing. It's really not that much of a risk, just depending on what your broker's policy is on getting assigned in an IRA. Most of the time, there's same-day substitution to where you just have to close out the short stock right away and you're fine. But here's the issue with which you need to deal with, or also need to be aware of when doing that strategy, is if you're doing this on a stock with a dividend. Oftentimes, that exact strategy looks great when you have a stock with a dividend on it. Because of the fact that the long-term calls really aren't that expensive and the short-term calls, you don't get a lot of premium in them, but they usually match pretty well with the longer-term calls, or at least in my experience that they have in doing the strategy. If you are assigned early on that short call because the stock went in the money and they're doing it right before the ex-dividend date, then you're going to be short the stock and you're going to get stuck paying the dividend. So you need to be aware of that. The other thing, if all these horror stories with which I'm mentioning are of any concern to you, Mr. Steamboat, then the other thing with which you can do is just buy a long call. If you buy the long call, you have rights. You're under no obligation. The only way with which you can get burned buying a long call is if you hold it into expiration and it's in the money, you take no action. It'll be exercised automatically by rules of the OCC. So I think that longer term options can be a good thing. If you don't like the short option and you don't want to monitor it at all, if you want to really set it and forget it, buy a 1 year out option, check it once a month. The other thing with which I would do, no matter what strategy that you have, is if you are paying more money than you want to lose on the long call or the long call diagonal spread, have some type of contingency or some type of an alert with which you can get out of it without even looking at it, or just having an alert sent to you to where you're fine getting out of it if you get the alert sent to you. So I think there's ways with which to do what you're asking about, but you need to be prepared in case some of the things that I just mentioned do happen.
Yeah, I was thinking about that when I was recommending it. If it was a step too far to add the short call in, I'm assuming he's listening to an option show, so he could handle writing a call once a month or so. But you're right. If there is that worry and you don't want to handle the hassle or whatever the case is, you don't want to deal with rolling the call or adjusting it or whatever the case may be, you're right. Just go out and gobble up the long-term call. You're still ahead of the game for all the reasons I just mentioned, from a margin perspective, from a Greek's perspective, and everything else, and you're still doing a heck of a lot better than just buying the stock, and you'll have a little bit more money in your account to play with, which is a win as well. So yeah, if you want to just go that way, super simple, then there isn't really no name for that except for just long-term call. So that's even less exciting, even more on the nose in your, what do you call it, diagonal call spread strategy. Since we're talking dividends here, let's jump to a question here from Lean Mean. He or she writes, is it possible for retail to capture dividends using options? Do you have any good dividend capture strategies for me. This is one I wish Henry could be on. He had to hop off for this one segment, but it's something we've talked about a lot on the show. The volume that's going up with dividend plays, at least used to go up, getting somewhat truncated a little bit this year. There have been some steps put in place to try to mitigate that volume. Not entirely successful yet, but they're starting to make some inroads into that. So hopefully this year, less than 5% of overall volume will be in these dividend capture type plays. But the key thing with a lot of these dividend plays, Mr. and Mrs. Lean Mean, is that they're all predicated on volume. You really need to do a lot of size to really have any chance of making that work. And the flip side of that is that's expensive to do unless you're putting it up on an exchange with a professional account and you have what's called fee caps. They're capping your fees. So essentially it costs you the same amount to do 1,000 contracts as it does to do 100,000 or 1,000,000. So you might as well do 1,000,000. That's what we're seeing in some of these names. So, long story short, to do really effective dividend capture, you need to have a sizable account and you need to be able to put a lot of contracts through. You need to have a lot of professional margin and everything else like that to be able to do it, because it's a fee-based game at the end of the day. And if it's costing you a lot, and that's the problem with retail, you usually don't have enough capital to really put enough contracts through effectively. Remember, you want to have a decent percentage of the open interest in your favor on these trades in order to have a good chance of getting some of these contracts through to you. And even then, it's a very small percentage. So you need to have that small percentage you're going to make be more than the fees you're paying. Otherwise, it's not worth doing. And the problem with retail is the fees are higher, the margin is worse, the counts are just not big enough. So if you want to try to play in some of these names, you'll see what's going up in some of these contracts. It's hundreds of thousands, if not more, contracts. If you can't do many thousands of contracts, you're going to be a very, very small blip. Even if you can do 100 lot, which is big for retail, that's completely inconsequential from a div play perspective. So I would encourage you to probably stay clear of these types of strategies where you're talking about trying to really get in and for lack of a better term, steal that dividend that you don't really have any rights to. That's kind of what we're seeing going up here. Mr. Uncle Mike, what do you have to say here for our friend Mr. Lean Mean looking to gobble up some divvies?
Well, if you're looking to gobble up divvies, you do need to be very lean and very mean. Yeah, I agree with you and what you're saying. The only thing I would add to it would be, let's say that you want to capture a dividend in XYZ stock, and you're concerned that XYZ stock is going to cancel the dividend. Well, a short put is the same thing as a covered call. So let's say XYZ is at 50. Shorting the 50 put is the same thing as owning the stock and selling the 50 covered call. And in theory, if it's a dividend stock, the put will be reduced, the call will be reduced by the amount of what the dividend will pay. And the reason for that is because of the fact that the put, if you're shorting the put, you actually have a greater amount of premium. So here's the deal with it. If you're looking to sell a covered call on a stock and you're concerned with the dividend going away before it happens, sell a put. So that way, if the dividend does go away, you already kind of captured, usually not all of it's factored in, but a very good portion of it's factored into the short put if that's a concern. Now, here's the caveat that goes with it, is if the stock announces that they're going to cancel the dividend, a lot of times the stock will go down anyway, but that would be one case to where if that's a concern, but you still like the stock, that would be one case to where I would feel more comfortable selling a put as opposed to doing a covered call.
Yeah, that's another way to do it. When I hear these kind of strategies, I think more in the market maker capacity, which is essentially doing the wash trades. So essentially you're in there trying to essentially capture a dividend that you have no legit claim to. This is in the case you're talking about where you like the stock, you want to put on that will certainly be one way to do it. I don't think of those as capture, more as kind of just essentially kind of getting a dividend you're somewhat entitled to anyway because you have a position or some sort of outlook in the stock. Whereas with the div, most of the div plays we see, they could care less what the underlying is. They just see a potential to exploit a certain percentage of the open interest and be able to capture some dividends on it. And so that's kind of what they go for. That's why they go up for hundreds of thousands, if not millions of contracts. So good questions there from Lean Mean and Steamboat Willie. Unfortunately, that's all the time we have for the mail block. And now, without further ado, we'll keep on rolling right on into our final segment. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is indeed the portion of the program where we break down what we're keeping an eye on for the rest of this week into the weekend, and quite literally not a lot on the horizon for the rest of this week because there's nothing going on tomorrow when you hear this tomorrow, listeners, and beyond. Friday, of course, the 3rd being the day where we observe the July 4th holiday here in the States. So exchanges closed, pretty much everything closed. No market trading activity going on tomorrow. So hopefully by the time you listen to this, if you wanted to get something on for the weekend, you did it already. Otherwise, you missed your chance. We already had non-farms. They were kind of moved up to a Thursday to avoid the Friday week. We also had jobless claims today. So all the big numbers are already out. We're kind of left in a bit of a holding pattern here with this truncated holiday week. Mr. Schwartz, what is on your horizon? What's on your radar going into this truncated holiday week and this longer holiday weekend?
Well, I have to say, I think in the end that the U.S. is probably going to be the safe haven, even if things get a little weird. And it's summertime, and things slow down. Things slow down in terms of volume, in terms of people allocating cash. I'm going to be looking for things to just get quiet. VIX to come back into the 13, 12-ish. I think whatever way Greece goes, in the end, I think the U.S. markets are far enough removed that, the capital will stay here, and you're not going to see any kind of crazy liquidation or anything that's really going to swing us around very much. I'm looking forward to some earnings in another month or so. Maybe we'll get a little bit of fireworks, little August fireworks, and but that's it. I think it's going to be kind of a mellow summer.
Certainly could use a little bit of something. The Greek thing at the beginning of the week certainly seemed like it had some fire to it that seems to be perhaps dying out now. And with that gone on the horizon, we've been pontificating on vol views, whether we might start seeing single-digit handles in the VIX, at least for a little bit of time. Not so much today as we're trending back up to the high teens. But if all this continues and if the beginning of earnings season is pretty tepid, that may indeed come to pass. But before we get to that, Uncle Mike, what are you keeping an eye on for the rest of this very truncated week into the weekend?
Well, just in general, I think that I've been kind of short TLT in a lot of ways recently, and so I'm taking the weekend off with that just because of the fact that if some bad stuff happens over the weekend, I do think that we will have a little bit of a rally in U.S. bonds. As well as gold. I still have my positions in gold. I think that could be another safe haven for people should some bad things happen over the weekend and the market doesn't like the vote in the referendum. So I think that right now just the sidelines are a great place for me to be. If I had to do something going into this weekend, which I didn't, but if I did have to do something, I'd like the idea of selling vertical call spreads or some type of call premium, just because of the fact that you can get some decent premium out of the money on calls right now. But the problem is that, let me rephrase that. And if the market goes down, great. And if the market comes up, then I think with the vol coming down, it can help you out a little bit in some way, shape, or form. So that's what I like. I'm just kind of watching that. But for the time being, I'm staying on the sidelines. And if we can hold on to positive numbers for the year going into next week, that's game on for me. This is an incredible dip to buy, and I'm going to be buying.
All right, thank you for that, Uncle Mike. And, of course, that's all the time we have for the Around the Block segment. It's also all the time we have for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel to see what they have cooking that may interest you. Starting with you, our special guest star, Mr. Flowmaster, Mr. Henry Schwartz of Trade Alert. What is cooking? What is going on in the land of TradeAlert.com that may certainly interest our listeners?
I've been playing around with a new little feature that my partner and head developer rolled out, which lets a user set up their alerts to be different depending on what kind of trigger they have, which sounds complicated, but basically means if there's a big upside call buyer, you can receive different information than if there's an at-the-money straddle buyer. So you can see exactly how far out of the money it is, how much capital is being put to work, versus an at-the-money trade, which you might care more about the volatility. So it's really actually very cool, and we're trying to kind of refine it so it's not so complicated to use, but it's fun, and it's always nice to kind of have something new to play with. So if anybody wants to check it out, just shoot me an email. You can send it to admin@tradealert.com, and I'll get it, and we'll be happy to show it off.
So people can build in essentially some filters into what they want to see out there and only see certain ranges or strike ranges or things like that.
It's funky. We already had the filters. This lets you basically change the templating on what you receive. So you're combining custom filters with custom templates that can change based on what filter is being hit. It's a weird one, but it's actually very, very useful. It's very cool.
I want to set up a filter so I can only see 200% out of the money calls trading in biotechs, please.
That are
under $3. That's what I want.
I got a wild one from I think it was Tuesday. 150 strike puts in Netflix. Okay, Netflix is not split yet. Okay, so it's still a $480 stock. Somebody paid 16 cents for some July 150 strike puts, and 77% out of the money. And it was one that we noticed, and I was like, wow, there's some free money for somebody. About 900 of them traded.
Really?
Yeah. So it was. I think somebody had a put wing problem. I'm sure you remember those little glitches that can happen. And stocks at 658, and they were buying the 150 puts.
Only needs a nice 500 handle sell off for those. They're expecting another Netflix apocalypse like we saw not that long ago. What was that 2 years ago now coming up on where they got cut in half? Even that wouldn't do here. You need this to be almost wiped out for.
Yeah, this was the Armageddon trade.
Yeah, I think maybe they were a little bit early on the trigger. Thought the split had come maybe or was about to come. Maybe they don't understand how the splits work.
Maybe it could have been.
They probably should listen to our show of ours or two first before they did that. Would have saved themselves 16 cents or so 900 times.
Yeah, it was a decent amount of money.
All right, Mr. Flowmaster, thank you for joining us. Again, listeners, you're always writing in asking us about analytics and different suites and what to use. If you haven't checked out Trade Alert, you're doing yourself a disservice. Surf on over to tradealert.com. Kick the tires over there. See what they have to offer. There's a reason why we use it so much here on the Options Insider Radio Network at the Options Insider, because it's really the only place to get a lot of this data. So surf on over to tradealert.com. I think you're going to like it. And Uncle Mike, take us home, sir. What's cooking in the land of RCM Wealth Advisors?
Well, at RCM Wealth Advisors, lots of things are going on. Today, I'm just going to talk about our wealth management. If you are looking for a financial advisor in one way, shape, or form, if you have as little as a couple $100 per month to invest, I am happy to work with you. We are cleared up in such a way to where we can handle taking on a few more clients. So if you are interested in such a thing and would like to have options as part of it, depending on what your objectives are, of course, feel free to give me a call at 312-212-3531 or send me an email at mtusaw@rcmfs.com.
What if I call you up and I say I want you to do nothing but buy me T-bills and never touch an option? Would you just hang up the phone on me?
I don't know if I could. Yes, sir.
All right. Thank you for that, Uncle Mike. Give him a call. I know a lot of you have done so already. Take advantage of all the stuff he's talking about here on the program today, rolling, adjusting, as well as, of course, all those discounted commissions. If you trade a lot, it may be worth your while to make that phone call. Give him a call and have a nice chat. At the very least, you get to chat with Uncle Mike, and there are certainly worse things. And on behalf of Uncle Mike and, of course, our special guest, the Flowmaster, Mr. Henry Schwartz from Trade Alert, I want to thank all of you guys in the listening audience for downloading and streaming and subscribing to the show, and, of course, for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.